Otherwise, thank you, Lars. Thank you, ProHearings, for having me today. And we'll get started. Okay. So Northgold is Central Finland's premier gold explorer. As we're the only listed company focused on exploring this region, we offer investors exposure to both early and advanced stage gold exploration in a top jurisdiction of Finland. We're Swedish listed, trade under the symbol NG on NASDAQ First Growth Market Exchange after listing March of last year. I've been the CEO of the company for a year and a half now. Before that, I spent 3 years as a research analyst at a Toronto investment bank, and before that, 10 years as an engineer working on various engineering, permitting, and construction of mines across Canada. I will be making some forward-looking statements, so have a look at this disclaimer when you can. This presentation will be available on the website after the presentation under the Investor tab. For those of you who are new to the story, Northgold hosts near-surface resources totaling 725,000 ounces gold equivalent across our 2 co-located project areas in our region of focus, Central Finland's Middle Ostrobothnia Gold Belt. And that resource is set to grow following last year's 5,000 meters of drilling completed and this year's planned 3,000. This belt has a history of base metals mining and is now also emerging as a gold district. The gold price has been rising lately on the back of persisting inflation, risk of recession, and geopolitical factors. And this has been helped by a historical high of over 700 tons of gold purchased by central banks around the world from January through November of last year, which was led by China and other Eastern nations as they appear to be attempt to reduce their dependence on the US dollar somewhat, which appears to be losing its luster somewhat as a global reserve currency. And we think this trend will continue, especially if we continue to drift towards recession. I'd like to remind investors that in the last recession around 2008, the gold price more than doubled from under 800 an ounce in 2007 to more than 1,700 an ounce by 2011. And we believe the stars are beginning to align for this trend to repeat itself in the current economic cycle from a gold price standpoint. Here we list our 5 key investment highlights, which we think checks the boxes of key mining investment criteria. We're in the attractive jurisdiction of Finland, consistently ranked top 10 globally and remaining a target for major gold companies. 2, we have a dominant land position with district scale potential and an underinvested and emerging belt with solid starter resources and exposure to resource growth and new discoveries. 3, good local infrastructure, including road to both project areas that connect to rail and port. And our mineralization's high value in that it's near surface with low discovery cost, low strip ratios, suitable for open pit mining, and open at depth where very little to no drilling has been done. We have an experienced board and management incentivized with combined ownership and 9% with solid founding shareholders with good track records. Here's the big picture geologic setting of Middle Ostrobothnia, where we are focused. Our investment thesis stems from the fact that significant exploration investment has been made on the Swedish side of the Gulf of Bothnia, resulting in multiple major discoveries along Sweden's gold line and VMS trends, as shown by the yellow dots here. And this has attracted investment from major mining companies, such as Agnico Eagle, which owns half of Barsili Minerals, shown here as one of these small dots, which is a multi-million ounce open pit underground deposit on the Swedish side. And we believe this prospectivity should extend over to the Finnish side of the Gulf along the Rahi-Ladoga trend, which has received a fraction of the exploration investment relative to the Swedish side. But it's already yielded some early discoveries, including a couple of Northgold's largest deposits, Kopsa and Andrusneva. And here we'll have a closer up view of Middle Ostrobothnia. It's a rather busy slide, but it's essentially a claim map, exploration tenement map of the area, showing the significant projects. In Middle Ostrobothnia, we're focused on 1, growing gold resources and advancing towards development, 2, making new gold discoveries, and 3, continuing to consolidate the belt. Our 2 projects include the flagship Kopsa at the south of the map, which hosts a 500,000 ounce gold resource with some minor copper. And then to the north, 50 kilometers or so, is our earlier stage Kamala Trend project that covers a combined 15 kilometers along a prospective trend and already hosts 2 small resources and at least 10 early stage prospects. Other significant projects in this region include to the southeast, the depleted Piasami copper polymetallic mine held by First Quantum Minerals, and to the north, the Liva gold mine and mill, an 800,000 ounce gold resource. And the Liva mine was recently acquired by Canadian private company Pilar Gold, which plans to restart the mine this year, and which we're happy to see attention in our belt. Both the Piasami and Liva mills will be considered by Northgold for possible future processing of material from our most advanced stage project, the Kopsa project. Lastly, to the west, there's the Hersikangas gold deposit, 89,000 ounces gold, which is a non-core project held by Rupert Resources. And as mentioned, our strategy is threefold: grow gold resources and advance towards development, 2, make new discoveries, and 3, continue consolidating the belt. Based on my experience, this tends to be the winning recipe for junior mining companies and often what the major companies are looking for. We have stated an exploration target of 1 million gold ounces by the end of gold equivalent ounces by the end of this year. The bulk of this potential growth, if not all, will come from the flagship Kopsa, which is our most advanced project, as shown plotted on this value confidence chart. And we plan to advance this project to development stage once again in the coming couple of years through the possible completion of an updated PEA. Recall that Kopsa has a historic PEA from 2013, which had suggested positive economics at a gold price of $1,200 per ounce and copper price of $2.72 per pound. And that's according for past historic plans for on-site ore sorting at Kopsa, and according to historic plans for off-site processing arrangement from the past. And our earlier stage Kamala Trend project trails behind on this chart, but it may turn out to have much bigger upside given its 15-kilometer strike length along a prospective trend that already hosts some starter resources at one end of it. Here we have enterprise value per compliant resource ounce listed for Gold Explorer and developer peers. Over the past 2 months, the gold price has risen roughly 10%. To roughly $19.30 per ounce US dollars. And that's helped gold producer stocks collectively rise an average of about 16%. Gold developers have risen about 12% to our peer group average of 90 euros per ounce here. About 2 months ago, that was 80 euros per ounce. While gold explorers like Northgold, we've remained relatively flat. Our explorer peer group average rose only 4% in the last 2 months. To 46 euros per ounce, as shown here. This is somewhat expected when a gold price rally. You tend to see the producers get rewarded first, and if that rally sustains itself, that investment will trickle down to developers and ultimately to explorers. Northgold's compliant to 702,000 ounces gold equivalent. Recently traded near the lower end of this range of peers, around 17 to 19 euros per ounce, which of course is a discount to the Explorer peer average of 46 euros per ounce and to the developer average of 90 per ounce, creating a gap that we think should narrow as Northgold continues to grow its resources and continues to advance them further towards development. And we think this offers solid near to mid-term upside for Northgold investors. Presented here is our activities schedule showing our achievements from last year and plans for this year. As mentioned, we completed nearly 5,000 meters of diamond drilling last year aimed at growing resources at Kopsa and aimed at making new discoveries at Kamala Trend. Roughly half the gold assays were released last year, with some more released earlier this year, with the remaining of gold assays and all copper assays slated for release in the coming month or so, with an interim resource update due for COPSA by mid-year. Also this year, we plan to drill another 3,000 meters or so combined across COPSA and Kamala Trend, which is already funded from our current cash and which will, with more details to be announced on that soon. Also slated for this year is we would like to recommence COPSA development activities, beginning with some metallurgical test work and ore sorting test work at COPSA. And that's to confirm as well as build upon the vast amount of historic data that already exists from past studies. And by year end, we'll aim for another resource update company-wide when we aim to converge on our exploration target of 1 million ounce gold equivalent. And this is just a quick slide to give a snapshot of some of the exploration work we did last year. So our flagship COPSA plan view is shown here. All the black dots are all the old holes, and all the yellow dots are all the new holes that we drilled. So as you can see, we're trying to expand the existing deposit along its limbs and along strike a little bit and so on. And I'd refer you to our press releases for more information on the drill results, but which will continue to be released for the next month or so as they're received from the lab and processed. But just as an example of some of the results we've put out, we've hit our best gold intercept to date on the project of 3.98 grams per ton over 98.7 meters, confirming the high-grade core of the deposit. We've also had a successfully expanded gold mineralization down dip along the south edge of the deposit, including an intercepted 0.78 grams per ton gold over 125 meters, as circled and listed on the cross-section and list here. We also encountered several higher grade intervals at depth which are interesting, such as 7.1 grams per ton gold over 3.2 meters from a depth of 150 meters along hole. And these higher grade hits at depth remain open towards depth and may create the possibility in the future for underground resources. We have a lean team and diverse board and management team, which grew slightly last year with the addition of Petteri Sianen, our VP of Investor Relations in Finland, and our exploration manager, Simo Pipo, an eager and sharp geologist who is overseen by our expert local geologist and board member, Timo Mäki, on the top right, as well as by our technical advisory board. Lastly, on the share and capital structure, Northgold's capital structure is tight with only 10.5 million shares outstanding and only some 320,000 warrants, all held by myself. The company's supportive founding shareholder groups include Magnus Minerals Consultancy in Finland and Starboard Global Private Equity Group, which together with their related parties own 29 and 25% of the company. Board and management are incentivized with their 9% combined ownership. And as you can see, the Northgold share price rose multifold following the IPO last March, which was at 11.6 SEK per share. And that was when gold was flying high at around 19.50 per ounce, and when our gold explorer developer peer average was much higher, up in the 70 euro per ounce range, I recall, versus the 46 euro range it's at now. And also shown in this chart, the stock rose multifold following the IPO, and you can see also the junior gold miner index was also substantially higher back then than it is now. And that junior gold mining index shown by the gray line there, it's also rallied a little bit recently, but it's made up of predominantly gold developers and junior producers. And as mentioned, explorers have yet to really be rewarded in the recent rally, especially the smaller cap guys like Northgold. But we think, as mentioned, investment should continue to spill down cap towards us, provided this gold price sustains itself or continues to rise. And when this happens, we think Northgold's poised to attract more than its fair share of it. And with that, happy to take any questions.
Thank you, Mitch.
Thank you.
You have diamonds as well.
Do we?
You have a diamond mining, or was that just the name of the mine? You had it on the slide.
I'm not sure which slide you're talking about, but no, we don't have any diamond projects. There could be some diamond projects. I'm not sure what you're referring to.
Ah, okay. I just saw it on the slide. Sorry.
I was wondering too.
Yeah. Okay. I was hoping to get another James Bond song there.
Okay.
Guess we didn't. Back to business. If an investor wants an index.
Diamond drilling program.
Yeah.
Oh, okay, so yeah, diamond drilling is the name of core drilling because it has diamonds on the bit to advance through the rock. But thanks for clarifying.
My bad. If you want to compare, you want an index for Northgold, then you should search for junior gold mines.
Well, the closest one is that GDXJ, that's the Junior Gold Mining Index. But as I mentioned, it's predominantly developers, and it even has some junior producers. I think there's the odd maybe explorer, but much larger. So yeah, we track our own peer group of over a dozen companies that we think are comparable, just to get an idea for the valuations in the broader market. But yeah, the one I track is GDXJ, but it tends to be heavy on the developers and a little bit of producers.
Yeah. So you're a newly listed company. I think you IPO'd in Sweden March 24th.
That's right.
So we're 10 years down, and you've done pretty well it's an adverse year generally for smaller listed companies, but you're up some 35%.
That's right. We finished the year up 41% actually from listing, and we were the third top IPO of the year out of 41 completed last year.
Yeah. So if we get a bit technical, if you look at this, what's the index?
GDXJ is the junior gold index I follow, and it trades in New York.
Yeah. Do that follow gold price? I know gold had a big run October, November, December. Did the index follow, and did Northgold share follow?
Yeah, well, you can see that here. So you can see. So yeah, the junior gold mining index has risen, as you can see on the right part of the chart, the gray line. And as I mentioned, the gold price up 10% in the last 2 months, producers up 16%, developers up 12%, explorers up 4%. So, obviously when the gold price rises, people go out and they buy physical gold. But if it continues to rise and persists, they'll start buying stocks. Producers, I think all the peer groups have a lot higher to go based on historic trading ranges for this gold price. But I suppose investors aren't quite fully buying into it yet. But I think it should sustain, and I think they will.
Yeah. Another slide you had in the beginning, the timeline with CAPSA, it was like that one.
Yes.
Yeah. So COPSA is the furthest along.
That's right.
From your projects. At what stage? It doesn't have a net present value on it yet, does it?
It doesn't from our documents. There is a historic study from 2013, where we don't stand behind that, but it has lots of good work in it. That is a good starting point for us. Yeah. But we would love to revamp and issue our own PEA in the future, and at that point, it would have an NPV.
Yeah. So, about when would the net present value appear as a number you stand behind for COPSA?
Well, like I said, this year we're doing metallurgical work and ore sorting test work. So we want to confirm a lot of the work that fed into the old PEA and economic studies. And that's the first step, and that's going to provide the foundation for a future PEA. So we want to confirm some of that test work first, finish reviewing the data, and then prepare our own study. And that would require, of course, an off-site processing arrangement, which we don't currently have.
Okay, thank you. Question from the audience.
What sort of reserves do you need to open a mine?
Well, like we were talking about, there was a PEA in 2013 which demonstrated positive economics at that time for a historic off-site processing arrangement at that time at a gold price of only $1,200. So based on that, you could argue that we're ready now based on the historic studies. But before we make any further investment into that, we want to do our homework and dot our I's, cross our T's, and do all the right test work. And it's always better to stay a little bit ahead of development with resource growth, because if you have just a small resource without much growth potential, it may not warrant the investment to develop that project. So we want to have a little bit, we want to explore ahead of our development plans. But to your point, we hope to be at 1 million ounces by the end of this year, and we hope to have some of our test work done, metallurgical or sorting test work. And at that point, we should be ready to get back to economic studies, where we get the mine design, project NPV, like you said, and then we can look at prospects to construct the mine.
Could you co-utilize some investments with your neighbors, or is that not plausible?
Can you elaborate on that?
Well, I mean, it's a lot of investments in a mine, grinding and whatever. You have some other mine operations in the neighborhood.
Exactly.
Could you co-utilize anything of that investment?
Yeah, the initial production at COPSA would actually require that, because there's a conditionally permitted concession, but it doesn't have room for a mill. So the previous project relied on off-site processing of the material. So you mine it at COPSA, drive it down the road to an existing mill, like you suggested. So that would be a requirement for the current permitted footprint. And yes, absolutely, we will consider that. I've identified 2 mills in the area. One of them is roughly 100 kilometers away. One of them is roughly 40 kilometers away. In the future, we want to consider, arrangements with those mills, but we have none at this time.
These are early days, but do you have any idea about the production cost per ounce?
No, I don't at this time. There is a historic study which has some production costs. But I will say that the strip ratio on the COPSA pit is very low. So it was on the order of 0.6 to 1. So for every ton of ore, you only have 0.6 tons of waste. So based on that, the cost could be quite favorable, because you don't need to haul out too many trucks of waste for every truck of ore.
You had a slide with your ownership. Could you tell us some more on your biggest owner is Magnus Minerals? That's a Finnish private held company, 24.7%. And the second biggest is Richard Gasal. That's an individual, is it?
That's right, and he is in this gray box here.
Is the down, yeah.
So Richard is part of a group of three sharp investors and mining professionals, and they operate Starboard Global, and they're a private equity venture capital type outfit. And actually, they teamed up with Magnus Minerals and founded Northgold. Magnus Minerals is in Finland. They have expertise. They packaged up basically the assets of Northgold. They bought them on the cheap many years ago, maintained them, stuck them together. They're a project generator and a geological consultancy. These guys are more heavy on the capital investment, as well as listings on exchanges. They've done lots of. So these two groups got together and they founded Northgold. And these two groups are one of the main reasons I came over here and took this job.
Okay, so Magnus Minerals, that's both expertise, investment, and they can also do work for Northgold.
Exactly. We do rely on Magnus Minerals for probably less and less all the time, to be honest. Out of the gate listing, we rely quite heavily on them, and now we rely less so on them, but still they are the best in some areas for us.
Okay. Anyone want the final question for Northgold? Okay. I guess we're all ready to buy in.
Thank you, Lars, and thank you, everyone. Enjoy the rest of your day.
Northgold, Mick.